In this video, I'm going to explain precisely how the unused concessional contribution rule works and then show you how much of your unused contributions you should use this year, if any. Once we've covered that, we'll go through a case study example to show you how one of our clients utilised their unused contribution amounts to save almost $10,000 in tax this year alone, so that you can see how it works in practical terms. I'm Chris Strano, Managing Partner of Toro Wealth, where we specialise in providing retirement planning advice for 50 to 70-year-olds. I'm also founder of superguy.com.au. If you're new here, make sure you click that subscribe button and hit the notifications bell so that you get notified each time I release a new video. As always, this video is general advice only and does not constitute personal financial advice, so please read the disclaimer found in the description below. Alright, let's jump into it. In my opinion, unused concessional contributions are the most underutilised superannuation strategy. Of all the clients that come to see us seeking advice, very few have come even close to optimising their contribution strategy and taking advantage of these unused amounts. It is such a powerful strategy and not uncommon to save you tens of thousands of dollars in tax in one single year. So right now I'm going to give you a quick refresher on the unused concessional contribution rules, help you determine if you're eligible to utilise them, and then show you how much you should be contributing in this year and future years. Okay, so let's begin with how the unused concessional contribution rules work. Each year, the Australian government sets a concessional contributions cap. This is the maximum amount that can be contributed to super as a concessional contribution per person per financial year. The types of contributions that count towards the concessional contribution cap are employer contributions, salary sacrifice contributions, and personal concessional contributions. The concessional contribution cap for the 2023-24 financial year is $27,500 per person, and this will be increasing to $30,000 from the 1st of July 2024 for the 24-25 financial year. Each financial year, the amount of the contribution cap that you don't use is carried forward for a maximum of 5 financial years, and you can use any unused amounts in the current year in addition to the general cap. However, you can only use your unused amounts from previous years in the current year if your balance was below $500,000 on the most recent 30th of June. Make sense? Stay with me. So, when should you use unused concessional contribution amounts? Well, you should use unused concessional contributions when you are eligible to do so, and you are comfortable contributing to super knowing that these funds are inaccessible until retirement or age 65. And there is a financial benefit in using these unused amounts. So let's begin with the first point. Are you eligible to use your unused amounts? Well, if your total superannuation balance was below $500,000 on the most recent 30th of June, then yes, you are eligible to use your unused contribution amounts, and this applies each year based on the most recent 30th of June at the time you are thinking of making the contribution. You can check your eligibility by logging into your MyGov account, clicking on Australian Tax Office under the Link Services heading, then using the top menu bar to navigate through Super, Information, Carry Forward Concessional Contributions. You will then be shown what your balance was on the most recent 30th of June and whether you are eligible to use the unused amounts or not. It will also tell you how much you have in unused amounts. Just make sure that the correct year is showing. If you're not eligible this financial year, it doesn't mean that you can't ever be eligible. The unused amounts are always carried forward for 5 years regardless of your super balance, but you can only use them in a year that your balance was below $500,000. If you are eligible, the next question you need to ask yourself is, are you comfortable contributing funds to super that can't be accessed until retirement or reaching age 65? If you are not comfortable locking up more funds until then maybe you shouldn't be using your unused contribution amounts. For example, will you still have access to enough other funds before retirement in case of an emergency, or will it place stress on your financial situation if you contributed too much to super? What if you lost your job? What if you struggled to meet your home loan repayments? You should only be contributing to super what you are confident that you won't need before then. If you are comfortable contributing, then the final thing you need to figure out is how much you should be contributing. Basically, to optimize your concessional contributions, you want to get your taxable income down to a level where you pay no personal income tax. This doesn't mean contributing all of your income to super, because the tax-free threshold and some offset amounts mean that you can generally have around $21,000 in taxable income before you pay any tax. This number is important because it is usually not beneficial to make concessional contributions to super to bring your taxable income below this figure, because all concessional contributions get taxed at 15%. So there's no point paying 15% contributions tax and locking up your funds when you could have kept the funds in your personal name and paid $0 tax. Does that make sense? Now, you are required to use the current year's concessional contribution cap before utilising any unused cap amounts from previous years. So the first step is to calculate how much you expect your employer to contribute in the current year, because this amount will count towards your concessional cap. As a rule of thumb, most employers are required to contribute 11% of your wage to super, increasing to 11.5% from the 1st of July 2024 and 12% from 1st of July 2025. So if you earn $80,000 this financial year, your employer will be contributing $8,800 to super. With the cap being $27,500, this leaves you with $18,700 in the cap amount. This means that if it is beneficial to be contributing more than $18,700 to super to reduce your tax, then you might decide to use some or all of your unused amounts from previous years. To use your concessional contribution cap amount, you can either make salary sacrifice contributions to super or personal concessional contributions to super. If you want to know how each of these are done, I've added a link in the description below this video. If you do use any unused amounts, it will be taken from the earliest financial year first and then working backwards to the most recent, remembering that unused amounts can only be carried forward for 5 financial years before they are completely forfeited. Alright, if you've followed along to this point, you've done very well. Otherwise, you might need to watch it a few times to let it sink in, because this strategy is certainly worth knowing. So when shouldn't you use unused concessional contributions? Well, firstly, if you're not comfortable locking up the funds within super until retirement, then you shouldn't use the unused amounts. Also, if using your unused amounts is going to take your personal taxable income below $21,000 for the year, then it's not beneficial to use them. Keeping in mind that any other tax deductions that you might have will also be reducing your taxable income. At the end of the day, you should be seeking advice from your accountant or financial advisor, or both, in relation to your super contribution strategy, especially when utilising unused carry forward amounts. Okay, you've done well to take all of this in, but personally, I believe a case study example is the easiest way to help understand a concept such as this. So as promised, I'm now going to show you how we helped one of our clients reduce their tax by almost $10,000 in one single financial year using their unused amounts. Anthony was 62 years of age, and the date of our advice was the 11th of May 2024. Anthony had a super balance of $510,000 on May 11th, and his super balance on the 30th of June 2023 was $485,000. Anthony was on a salary of $80,000 per year, and he had no other income and no other large tax deductions or anything like that. Even though his super balance was over $500,000 on May 11th, he was still eligible to utilise his unused contribution cap amounts in this financial year because his balance was below $500,000 on the most recent 30th of June, being 30th of June 2023. So knowing that Anthony was eligible, we next needed to figure out how much he should contribute. Our first step was to calculate his unused amounts for the past 5 years. So when we looked into it, his concessional contributions over the past 5 years were as follows. For each financial year, we summed up all of his employer contributions, salary sacrifice contributions, and personal concessional contributions, and this gave us the total concessional contributions made for each year. For each financial year, we then subtracted the total concessional contributions he made from the concessional contribution cap for that specific year. The difference then represents the unused amounts that can be carried forward. So looking at this table in the 2018-2019 financial year, Anthony's employer contributed $7,600, and Anthony didn't make any salary sacrifice or personal concessional contributions. Therefore, his total concessional contributions were $7,600. In that year, the cap was $25,000, meaning he had an unused cap amount of $17,400. Applying the same calculations the next year, Anthony's unused amount was only $14,000. Then the following year, $5,000 was unused, $13,500 in the 2021-22 financial year, and finally $8,100 in the 22-23 financial year. This means that Anthony's cumulative unused amounts for the past 5 years are $58,000. So in theory, this financial year, Anthony can could contribute the current year cap of $27,500 plus the unused carry forward amounts of $58,000, totaling $85,500. However, Anthony's employer was expected to contribute a total of $8,800 this financial year in SG contributions, so we needed to subtract this from the total amount. This left $76,700 remaining that he could contribute. So now that we knew how much Anthony could contribute, we needed to calculate how much he should contribute. Now, we've already calculated the available cap amount as being $76,700, and we know Anthony's salary is $80,000. So if he made no salary sacrifice or personal concessional contributions, then his taxable income remains at $80,000 and his personal income tax will be $18,067. However, because we recommended he make a personal concessional contribution of $59,000 to super before the end of the financial year, we brought his taxable income down to $21,000, meaning he paid $0 in personal income tax. Notice how even though Anthony had a total available cap amount of $76,700, we only recommended he use $59,000 of this amount. Why did we recommend he should only contribute this amount? It's because there was no point taking his taxable income below $21,000 because he will pay no tax on $21,000 anyway. However, he will pay 15% contributions tax on the contribution amount of $59,000, being $8,850. The 15% is deducted from his contribution amount. It's not payable by him personally. Let's now compare the amount of tax Anthony has saved by making this contribution as opposed to the tax he would have paid if we didn't make any contributions at all. So without contributions, Anthony would pay $18,067 in tax. However, by making a $59,000 personal concessional contribution, he will only pay $8,850, resulting in a tax saving of $9,217. Once we figured out Anthony should contribute $59,000, how did he do it? So to make this contribution of $59,000, Anthony used the remaining $18,700 from his $27,500 cap this financial year after allowing for employers' contribution. Plus he used the unused amounts of $17,400 from the 2018-19 year, $14,000 from the 2019-20 year, $5,000 from the 2020-21 financial year, and $3,900 of the $13,500 unused amount from the 2021-22 year. Any residual amounts can continue to be carried forward until next year. Now, obviously for Anthony, all of this occurred towards the end of financial year, in May 2023, when he made the $59,000 contribution. So the way it works in practice is that he notified his super fund that he's going to claim a tax deduction for this amount for this financial year, and then he notifies his accountant, who will put it in Anthony's tax return, and Anthony will get a tax refund for all of the PAYG tax that he paid throughout the 2023-24 financial year, being $18,067. I hope this makes sense. Now, just a few things to be mindful of. If you are making a personal concessional contribution, you will need the funds available to be able to make the contribution. Or if you are salary sacrificing, you will need to ensure it's affordable and that you can still have enough left over for the groceries. You also need to be sure that you are happy to lock your funds away until retirement. Plus, if you are making a personal concessional contribution, it is absolutely essential that you complete the intent to claim a tax deduction form, which I alluded to earlier, and this can be found on the ATO website, the links provided below, or contact your super fund and ask them which form to use. They should have one on their website also. If you do not complete this form and wait to receive acknowledgement from your super fund, then you cannot claim a tax deduction for the contribution, which will render the whole strategy invalid. You must also be sure not to withdraw any of your super balance, transfer to another fund, commence an income stream, or complete your tax return prior to submitting the form to the super fund and receiving acknowledgement from the super fund themselves. Look, there are many ways that you can go get this strategy wrong, which is why I strongly recommend getting advice from your financial advisor and accountant rather than trying to implement this yourself. Well guys, I hope that you got some value from this video. If you did, remember to click the thumbs up button to show that you liked it and the subscribe button for more content. For even more tips, head over to superguy.com.au and subscribe to my newsletter for regular tips. It's free.